Welcome to the WTR Small Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-Founder and Chief Marketing Officer of Water Tower Research. In today's special podcast episode, I'm pleased to be joined by Jason Paltrowitz, Executive Vice President of Corporate Services at OTC Markets Group, to discuss the broader OTC markets ecosystem and, very importantly, to discuss the exchange's dynamic launch of OTCID in July of this year. Good morning, Jason, and thank you for joining today's podcast.
Good morning. I really appreciate the opportunity.
Likewise. So to kick things off, Jason, would you please give our listeners an overview of how the OTC markets ecosystem works today and why it became such a vital pathway for small cap companies seeking access to U.S. investors?
Sure. So OTC markets is what's known as a super ATS. So similar in operation to what NASDAQ used to be prior to it being an exchange, for those in your audience that remember back to those days. So we are a dealer market that connects together over 100 market makers that are electronically communicating to each other to create liquidity for the over 12,000 securities that are traded on our market. So within that ecosystem, we're talking about being the secondary market for some of the largest global brands that want to have access into the US and use our market to be able to do that. So we have companies like Roche, Adidas, and Heineken. But the other side of our market, and what we're to talk about here today, is to be able to provide early stage growth companies in the US and from around the world for that matter, the ability to be public without the cost, complexity, and burdensome oversight that comes with being on one of the national exchanges, so the New York Stock Exchange or NASDAQ. So really that being public shouldn't be painful mantra kind of dictates a lot of what we do, in that there should be a place for early stage growth companies to be public, but to do it in a way that's right-sized given where they are in their life cycle.
That's a great introduction. It's such a critical function that you all take care of. So the upcoming launch of OTCID in July represents a significant shift in the OTC landscape. What key market challenges in this new reporting approach are designed to address, and how does this new market fit in with the OTCQX and OTCQB market framework, Jason?
Yeah, so OTCID is really the latest in a very long line of kind of regulatory change and market structure change that we started, probably close to 20 years ago, from turning what was a phone and paper-based opaque market to a fully regulated electronic market, leading up to about 3 years ago when the SEC changed the rules around the public quotation of securities on our market. Again, for your listeners that are interested, SEC Rule 15C211, which kind of dictated companies' obligations as it related to being quoted in the public market. OTCID is kind of the next iteration of that, in which the regulators and investors and us, quite honestly, are looking at a number of companies that were traded in what was called our pink current market. Those were companies that had a public quote, that were tradable per that Rule 15C211, but that ultimately weren't really owning their equity. They weren't guaranteeing or providing any sort of disclosure. Things could have been old or stale or outdated. Companies could have been late in their filings, not verified the businesses that they're in. So the OTCID market is a way to give investors the comfort that the securities that are traded on that ID market have, in some way, there's been some engagement by the issuer. The company has verified their profile, has provided their most updated financials and disclosure, and are certifying that they are in good standing. And again, this is a way for investors to know, when they're looking at the securities on our market, what that level of disclosure and engagement is from the corporate level.
You just unintentionally took me down memory lane by mentioning taking orders on paper. I can remember it well. So importantly, how will this new market help small cap investors better evaluate risk and make more informed investment decisions?
Well, look, we think that disclosure, or sunlight, we would say, is the best disinfectant. Investors are naturally, if you look at the 12,000 securities on our market and you look at the volume and where that goes, where the liquidity goes, it naturally goes towards the companies that are providing disclosure. And as you rightly pointed out at the beginning, right, small cap companies are challenged, and they need to be able to separate themselves, to differentiate themselves, and to prove themselves. There's tremendous amount of upside from an investor perspective in investing in early stage growth companies, but there's also a tremendous amount of risk. And what we're trying to do here is make sure that investors have all available disclosure, that they understand that the company is being proactive in providing that disclosure. They're owning that disclosure. It's accurate, it's timely, it's real, so that they can find those opportunities and invest in those companies. And we think that was, in essence, a little bit of that missing link, is how on our market could those really fantastic companies that are in that early stage differentiate themselves from other ticker symbols that, quite honestly, perhaps could be dead, dark, distressed, not engaged, but still trading within the market.
Yeah, I can certainly say as a small cap investor myself, these disclosures are really going to be beneficial and helpful. How will these changes impact companies currently listed on the Pink Current and Limited markets?
So firstly, from the Pink Current market, effective July 1st, that market goes away. So for companies that have not signed on to our disclosure and news service, our OTCID offering, if you have not done that and gone through the process of providing the disclosure and the other things that one has to do to be on the ID market, you will find yourself on OTC, on Pink Limited, kind of effective July 1st. So there is a cutoff date, no ifs, ands, or buts, right? It's systemic. You're either in or you're out. You're doing what you need to do or you're not. And on that date, you're either on OTCID or you're on Pink Limited. While I can't necessarily say what does that mean from a liquidity or an investor perspective on day one, you'll just find yourself on either side of that fence. What I believe over time, and again, this has been borne out through the last 3 years as we've kind of gone through this 15C211 change, what you'll find over time is that investment will naturally gravitate towards the ID, QB, and QX side of the ledger of our markets, and fewer investors will be looking at, or even allowed to look at, the limited, and then even below that, our expert market. And I say that because, for a lot of these companies, their natural investor is U.S. retail, self-directed, family offices, and there are a lot of limitations that are put in place from a compliance, KYC, AML perspective around trading Pink Limited securities. So if you're going to your retail broker of choice, Schwab or E-Trade or wherever you trade, there's going to be blockers that are going to kind of prohibit you from efficiently trading in the securities that are on that Pink Limited market. And so that friction that gets created there will mean that investors will just naturally gravitate towards the markets where there isn't friction, and to the opportunities where it's much easier to trade, again, through their broker of choice. And so I think over time, that's what you will see. And again, post 15C211, we actually saw that even between Pink Current as it stood, and then to our QB and QX markets, where we saw more volume going QB and QX as those changes in even Current and Limited were affected 3 years ago.
So awesome. It's going to be most welcome changes. So you've been a strong advocate for reducing the complexity and the cost of being a public company, which I greatly appreciate. How does OTCID fit into this mission, particularly for small cap issuers looking to maintain market presence without the full burden of a major exchange?
Yeah, so we, as I said earlier, right, we feel like the being public shouldn't be painful, and certainly if you're an early stage growth company, your focus should be on growing your business. Your focus should be on what am I doing to get to a point where I've got a lot of investors and product and revenue, and I've got the business to where I want to be. All too often in the small cap ecosystem, too much time is spent from the C-suite on down as to trying to figure out how to maintain a listing. There's no lack of stories around companies that went to an exchange too soon, where you're doing reverse splits and you're trying to do all of these things to meet the exchange requirements for remaining listed. And we certainly feel that for those companies, there's a better route. And that better route is a market that allows you to, be fully compliant on a regulated market and use disclosure as the means through which to be public, rather than some merit review of an exchange or some criteria that really isn't right-sized for your company. And so ID is just part of that, right? Wherever you are on your corporate life cycle, ID is that first step. You've got good disclosure, you've got audited financials, you've done all the right things from a very base level. Put that into the market. As you grow up and you want to meet higher financial standards, your market cap grows, your liquidity grows, your share price grows, then you can move on to one of our premium markets, our QB and our QX markets. Again, these markets have higher standards, different standards that allow you to demonstrate your investability. But ultimately, it's about disclosure, and it's about not having, us as a market do merit review on your business or to try to make you fit and mitigate risk as you would have to do if you're an S&P 500 company, and give a company a chance to focus on the business, not on the listing.
Music to the ears of many small cap CEOs. So the small cap space often struggles with liquidity challenges, as you and I both know. How do you see OTCID's enhanced disclosure requirements impacting volumes and investment in these securities?
Yeah, again, I'll go back to what we talked about. I think investors, especially in the volatility in today's markets, investors are constantly looking for opportunity, right? I think we've kind of come out of this where everybody's just in the big seven. And, as we're seeing more opportunity in non-US equities and people looking at different places to put their money, I think investors want to be comforted and confident in securities that they select. And so again, by taking companies that were in this pink current market, and that word current was kind of a misnomer because there was nobody overlooking, or there was no oversight per se as to whether or not these companies were current in their disclosure. If they were current, there's stories of companies that one day were, a cannabis company, and then they were a pet food company, and now they're an AI company, right? And there's no mechanism through which to determine whether any of that is truthful or accurate. And I think ID is kind of gives those companies the ability to demonstrate that, to certify that, to own that. And where investors can find that, again, one naturally would assume that liquidity would gravitate towards that. And so I think it is a helpful building block in the continuing structuring of our market and creating a market, again, as I keep saying, right, that's right-sized for the early stage growth company.
I absolutely concur with that thought process. So just wrapping things up, Jason, looking ahead, say 3 to 5 years, what is your vision for the small cap ecosystem and the OTC market's role in shaping it?
Well, we would love to continue to see, and we spend a lot of time dealing with the regulators and the whether it's the SEC or FINRA or others. We'd like to see some of the changes on our market that mimic some of the things that companies that are listed on an exchange have access to, whether it's things like margin rules. One of the things we're talking about at market offerings, blue sky exemption for all 50 states. We continue to be very active in saying, look, the securities on our ID and QB and QX markets are just as good, if not better, or meet the same criteria, or would be eligible to be on NASDAQ Capital Market. And so why should companies have to pay up to be afforded some of these regulatory benefits that they don't get with us, when it's in essence like for like when you're looking at the company? And so within 3 to 5 years, to be able to provide a more vibrant capital formation, the ability to actually raise capital in a much more efficient way, the ability to maybe have 50 state blue sky exemption, to be able to have better margin eligibility. These are all things that we continue to work on and would love to see, hopefully sooner than 3 to 5 years, but certainly a recognition that the securities on our market, if they're doing the right thing, should be afforded the same benefits as exchange listed securities.
That's great, and I can genuinely tell you that I salute you and your colleagues. I think this is a great development and a big advancement for small cap players. So this has been a really timely and insightful update on OTC markets and the imminent launch of OTCID. Thank you for joining us today, Jason Paltrowitz, Executive Vice President of Corporate Services at OTC Markets Group. Also, a special thanks to my Water Tower research producer and editor of the podcast, Joe Brunetto. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We'll see you next time for another edition of the WTR Small Cap Spotlight podcast.